to do what we do best, and that is put the work in. In this episode specifically, we're going to be taking a look at what expectations should be for a cycle floor. Now, that's through this year, 2025, into next year, 2026, and all the way out into the 2028 halving. 3 reasons why we want to have that type of awareness. 3 reasons. Number 1, we want to know when it could be a good time to dollar cost average into Bitcoin with a larger purchase, right? A lot of people like to follow the price, and as price is rising, they're like, now's a good time to buy, and usually that's not a good time to buy, and vice versa. As price is falling and fear is setting in, that's usually not when people are getting ready to go ahead and add to their stack at an opportune time. So we want to know ahead of time what would be areas where we would have expectations, those that are looking to make a larger DCA purchase are ready to do so. Number 2, the presence of mind during a crisis. What type of crisis? Who knows? We're going to find out eventually, right? It could be a liquidity crisis. It could be a recession. It could be a global recession. It could be a deflationary spiral. It could be a whole host of things. Ahead of time, we would like to know what expectations would be for a floor. That way, no one makes an irrational mistake. What would an irrational mistake look like? If you remember back in 2020, March 2020, Bitcoin had a 63% correction in a couple of weeks. And this was leading up to, obviously, the global lockdowns. It had a lot to do with all of the trading taking place, the derivative trading taking place on one main exchange, BitMEX. And that particular exchange going into a liquidation feedback loop. This move ended after they would go ahead and they put it into maintenance. They basically paused BitMEX, took the exchange offline, and then right out of that, you saw price rebound pretty substantially. Number 3, and perhaps the most important, and perhaps the one that none of us want to face, and I hope that we never have to face it, but to give us a point of reference where you need to question your thesis. Now you can say, come on, how could you even say that you hope that never happens? Well, we're doing it right now. We're thinking about where are we wrong, regardless of whatever, all the rhetoric you hear around you, but what would be like, something is really wrong. What do I want to do going forward? So those 3 things we're going to talk about. Before we do, I'm going to ask you, if you're new here, welcome. Go ahead right now and subscribe to the channel. I'm going to ask you that right now, to subscribe to the channel. And also, if you're not, welcome back. And if you're a regular, to go ahead and smash the like button. Everyone else, at whatever point during today's session that you value the time spent together, do go ahead and hit that like button as well. We're going to talk about a lot of things aside from this. We're going to open up with the looking at the Bitcoin cycle low expectations to give ourselves those awarenesses that we were talking about. And then we will look at, obviously, our current positioning, not only looking at those Bitcoin exits. We will be looking at our current position across Ethereum, Solana, and also Cardano is about to enter the market, currently on hold. And then we'll look at our stocks as well. We'll look at and answer some questions about what happened over the weekend with the China-USA situation, the market's response thus far, and what expectations are going forward. And then one thing that I really want to look at, and if there's any interest, I think tomorrow we'll look at it today. It's what we do, but we have to take a look at our outlook for gold now. I think tomorrow's session specifically is going to have a heavy focus on gold and silver and expectations. But today we will begin that. Well, today we'll take a look at gold, and then tomorrow we'll dig in deep. If there's any interest, go ahead and let us know. Boom, 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 boom. Bitcoin down because it's acting as digital gold, or is Bitcoin down because, for a whole host of reasons, equity markets thus far holding on to major gap gains. Bitcoin here, like we're seeing gold, and I'm seeing the dollar as per expectations, right? said if we see some trade deals coming to fruition, if we see, and then over here, this was our first short on gold, was all the way here just above 106. This is where we closed and reversed the position down over here. Over the last couple of sessions, we've been looking at this and following this in real time. And look what's happened. We've come right into our outermost trend line resistance. If we break above that, dollar has the potential to appreciate further. Is Bitcoin simply, I've seen a lot of speculation, perhaps even call it dubious speculation, right? Ace shared a video from Ben Cowan, and he's talking about, does Bitcoin actually lead liquidity? Is it the first to sniff it out, and drawing up some comparisons? If that's the case here, as the dollar is bouncing, appreciating over here, that's going to obviously tighten up global liquidity. It's putting a little bit of a squeeze on it. Is that what Bitcoin is reacting to right here today in the short term? I would think so. I think that that's exactly what we're seeing. I don't think that that has any long-term consequences, in so much as that if we were to see the US dollar stabilize and, let's say, continue to climb back towards 105 and maybe even higher, if equity markets were rising on that, in that type of regime, you'd probably see Bitcoin also rising and very healthy. But looking at what happened in the last, call it 72 hours, 42 hours, and this sharp bounce in the dollar is likely putting a little bit of a squeeze out on global liquidity, and that's what Bitcoin is likely following right now today. All right, we have a lot to get into. Let's start with taking a look and answering some of the questions that we were just looking at in order to give us a bit of awareness. I mean, and just to continue that conversation, and all good thoughts over here. Bitcoin has been acting like a risk asset, and Bitcoin, just like, let's zoom out 1 second. Let me pull up a quick chart of Bitcoin that would likely help us. And I could say, like, well, is this where Trump said buy Bitcoin? No, but Bitcoin is up a massive 40% in the past couple of weeks. So it's acting like a risk asset after we've seen what was basically so far the low in fear and sentiment. And when President Trump of the US instituted the 90-day pause on tariffs, that then has continued ever since they talked about China and the US getting ready to meet in Switzerland. So is that like a sell the news type of event? Look, it's too soon to get into that. We talked about on our Friday session of taking a speculative profit, right? Our entry was down all the way here on Bitcoin, and so we're going to take profit on that. And that was a very rare occurrence of us not waiting for momentum to fade, but look to get out at what is a very important resistance level. And we broke above that resistance level. However, and you'll see this on the Nasdaq when we look at the Nasdaq in just a little bit, you saw that we've broken above these wicks down over here. But if you just go ahead and you were to go into that resistance of this area over here where I'm looking, that's where we came into. We're going to see a very similar situation on the Nasdaq right now, and whether or not this is the beginning of something that's going to get faded, meaning to the upside. Like, at the same time we exited discretionary this morning, 40 minutes ago, we also exited our mechanical long positions as well. So that's a bit of an affirmation. Like, yes, it's surprising, but you're on the right side. And then you zoom out, Bitcoin bull runs is still in the market. And if this market is extremely strong, then this is going to get faded really quick. But even if we see the beginning of a pullback, and this pullback is, as long as it stays above, let's say this trend line over here, very and extremely healthy and expected after 42% move, unless you think, and a lot of people do, that we are about to enter some type of, let's say, rip your face off type moment, which I personally do not expect. And again, the monetary policy is not even close to being aligned. QT is still running at a small pace, quantitative tightening. The Fed is running off their balance sheet. We are seeing some signs of that actually stabilizing and running flat, but we'll look into that much later. By the way, a lot of people have the expectations that Bitcoin is about to. This is the reminiscence of a stock operator, Jesse Livermore's cylinder. And you could see what's neat about this chart, though, is that this was prepared as Bitcoin was in drawdown. So I love that awareness. And by the way, that as long as that trend line holds, you can take a deep breath. But are a lot of people now looking for this massive melt up? And will a lot of people be taking profits into that if we do get the next leg up? Things that we're watching for. I have zero expectations, by the way, if you're looking at this chart and you say, are we projecting that Bitcoin is going to go from $100,000 to $3 million by the end of this year? Absolutely not. We're just trying to illustrate the psychological of a market Wall Street cheat sheet and looking for price to see if it's about to begin their rise. Is this more appropriate? And if you did see by the end of the year, Bitcoin coming into, say, we'll call it 160,000, right? Anywhere and above. And if that were to happen, or a lot of people going to think that Bitcoin is looking to peak here and top out at a time that it has, if you align 4-year cycle behavior many times in the past, absolutely, a lot of people will be looking for that, which is why we're going to go ahead and continue to make sure that we stay on the right side. And indeed, you did see Bitcoin dominance over here, David. And much like we saw not too long ago during this massive move down. By the way, that was not alt season, right? And alt season this time of cycle would be extremely strange, but we've seen strange things happen all the time. Yeah, big move off of a sharp rise in Bitcoin's dominance. And you saw Bitcoin's dominance rise roughly from 55 to 65% in just a few months. And during that time, you all know that what was happening was that Ethereum was getting absolutely wrecked. And Ethereum makes up a large portion of the altcoin market. And that was reflected very clearly. By the way, the template was not broken. We were in a major drawdown on Ethereum at the time. We were into the largest drawdown since the 2020 halving. Ethereum currently holding a mid double-digit position, 46% into profit. And it makes sense that Bitcoin dominance is falling off over here. Is this the start of alt season, or is this just more of a move that we saw, if you remember, the summer of 2022? Summer of 2022, we were trading CTM 2.0, which obviously a lot of people still trade CTM 2.0. But since then, we have improved on our modeling. And if you come over to the summer, we are in a massive downtrend in Bitcoin and the crypto markets. We had the 3 arrows capitulation candle in this area over here in June. And then out of nowhere, you saw a mega trade develop on Ethereum. In this case, it was not the start of alt season and or a bull market. And you could see that this trade did wind up retracing afterwards. Are we in a similar situation right now? I would expect so, but again, this is a developing situation, so we need to constantly monitor it and make sure that we stay in front of it to stay on the right side. So we did see the mechanicals taking profits and exiting the market. We see that IBIT, the spot ETFs on GBTC template, is still holding its open trade, and the Bitcoin bull market is still in its current trade over here. However, it is a very low win ratio, less than 20%. However, if you look at the average win to the average loss, average winning trade is 356%, with the average losing trade 2%. So a mega risk to reward on each trade. If you want to outperform buy and hold, and going back to Bitcoin's earliest time, Bitcoin bull runs drastically outperforming buy and hold. If you look at that from just, and we did this just on Friday's session, if you're saying from 2023, if you bought the bottom to now, well, in buy and hold, if you knew how to buy the bottom and sell the top for this current period of time is outperforming, but that will not last. Let's move back and get into the expectations of what we could be looking at for the floor of Bitcoin. A couple of observations, and let's start with observations. And all we're going to do is make some observations. One of the observations I can make so far is that 100 people in the room and only 27 have hit the thumbs up. So someone's got to step up. Nevertheless, some observations we can make about this current cycle that we're in to previous cycles. And one observation that was made last cycle from a lot of people was that Bitcoin is never taking out the prior all-time high. So you go to December 2017, all-time high was like 19,400, 500, 600, depending on your exchange feed. And in the past, a lot of people would say Bitcoin has never taken out the previous cycle all-time high. And that's obviously correct. That has happened, and that changed this cycle. And you could say, or I could say, watch over here on the high and come to the right. And if FTX was not running a scam and that didn't blow up, taking down with it a whole host of other exchanges and companies themselves, then maybe we wouldn't have taken out the previous high or been very close. And I agree with that. However, what did happen was we saw the capitulation of FTX. And all I could say is the observation I can make is that, well, we didn't take out. I'm going to each cycle and I'm looking at the 0.786 retracement fib. You take the cycle high to the cycle low, right? And each time you've broken above it, you have taken out the cycle high. Broken above it, taken out the cycle high, broken above it, taken out the cycle high, broken above it, taken out the cycle high. We've never traded back below it. We came close this past cycle. That's coming in, or not that close actually, 13,500. And is that a good marker? We could say, would that be the ultimate floor we could look at? And that's coming in right here. We'll call it 49,350. That's an important level. Out of all the levels we're going to look at, that is the lowest level that we could speculate is the low point of Bitcoin. Now, you could look at what would happen if, and I'm going to point back to this period over here where Bitcoin corrected, right, 63%. That's not off its high. That was off the rally into June, right? Off of, let's say this, off of where we saw the massive escalation in the global situation in late February 2020 into March, Bitcoin came off roughly 54%. So is it fair to say that in an outright crisis, you can and should expect Bitcoin to come off 50%? That was quite the crisis. The world was locked down. That the whole world was like, but could there be a greater crisis in our lifetime, and what that would look like? I don't think that we could even guess. And all we could say is that, well, no one expected, or few people would have expected that type of situation that developed in 2020 to have developed. So now we could say that who knows what could happen in the future. But I think it's a fair expectation to say that, well, probably and likely we would not have at any given point in time more than a 54% correction. If that were to happen today and you saw price come down 54%, look at that. I don't even know if we come right into the previous retracement fib. So that's interesting. And if we're able to make a next leg up, that will give us some room. Are there other ways that we could look at it? This is the structure of the market. All of these lines that you see currently on the chart. And I'm going to go ahead and just add the current resistance that we're looking at because, well, that's what we do. That makes sense. And I'm going to go ahead, and we just looked at that line earlier. And we're saying this was where price was also finding a bit of support. And after it broke, yeah, we traded above bolded one, but we came right into there over there, and that's what we're watching. What's really neat about this is you could see the November and then into December, the lows over here. That was the structure. What's really neat, I love this one over here. As you can see, that was the October and November 2021 top. Not only that, it was also the March and the April 2020 top. And those lines continue out, and this structure holds throughout Bitcoin's history. It's just what it is. Don't ask me why. Boom, 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 boom. I heard that another company just went public. Or another company merged with a current public company. They're starting with $700 million, and they've becoming a Bitcoin treasury company. I believe it's the head of Bitcoin Magazine, David B, is also involved in that. And we continue to see retail at the bid. The retail this cycle, and we've been saying this now for well over a year, people looking at Google searches and they're like, well, Google searches are so low. This cycle is not about retail at all. Retail is not going to move the market. Retail are these small corporates coming in with 50 million, 300 million, $500 million, all these regular bids that we continue to see from multiple companies, including like some of the miners like Mara and so on and so forth, as well as who uses Google to search anything anymore. Now, a lot of people do. Most people use Google. The market share for the first time since you could remember dropped, but it's still something. It's significantly high, but a trend shift is actually occurring. Most people that I know use LLMs to research today. And the other thing is most people, unlike in 2017, are familiar with Bitcoin. You don't have to go to a search engine and search what is Bitcoin anymore. So bringing this back up, I want to look at from our structure what would be some expectations of what would be some significant lows, giving us some awareness points. So I'm zooming out first, and one of the first ones I'm going to look at is over here. This is where we peaked into April, right? And from where we are right now, right, you can see that if we come into this trend line over here, that's roughly a 20% drawdown. And that's obviously well within expectations. We've seen multiple 20 and 30% drawdowns ever since the 2023 bull market breakout. We know and believe that we're going to see many more drawdowns of that magnitude. And likely if we tested that, that's a hold your breath type moment. And if that breaks, we come down into that next level. That next level is over here, which is a very normal and healthy correction of roughly 30%. You can see this is where we came down to in August of 2024 during the Japanese yen unwind. You can see this is where we came down to early in January 2024. And you can see that since this support has been established, it's been tested twice and has continued to hold. And I would imagine there's a really significant chance that that support, if tested again, would continue to hold. So if the April lows are taken out, that's likely where we come into that pocket of those double lines over there. That's roughly 70, we'll call it 71,000 Bitcoin. It's rising. So as you move out into the end of the year, right? If you move out into December, that number is much higher, 90,000 Bitcoin. All right. Again, why you're doing this and why you're looking at this is just give you the awareness as when is a good time to dollar cost average into Bitcoin with a larger purpose. If you think the cycle is ending in December, by the way, and Bitcoin trades down to $90,000, you are likely not going to be taking a position. So I will do my best with you to not only continually give us de-risk levels. No one knows when the top comes in. And when that top comes in, it's very, very difficult to keep that calmness and your wits about you. And there's always that human instinct of hope, right? A lot of people probably have what happened in the previous cycle very much ingrained in their psyche, and it's likely going to cause some mistakes, and it's going to cause them to exit this cycle too soon. So we're going to do our best to make sure that we're able to stay continually on the right side. Let's continue with this, and I'll get all these. If we break below that, though, if we break below that, and this is, I'm not going from the high, I'm going from where we are right now. We talked about a 54% would be a pretty big deal coming into that previous retracement fib 0.786. We have a number of 49,350. This over here, I have at $53,000. This is if you come off the low of this bull market, the bull market breakout. We called it 17,250. We did that because we were looking at the previous cycle ceiling, not the floor, the ceiling. And I was saying that's not the highest price point of the cycle. That's where price was able to establish support and resistance. 17,250, we broke above. We had to get back short, broke above second time. Since then, we've had no invalidations. An invalidation would be a break of this trend line over here, coming in just above the retracement fib. When I say just above the retracement fib, that's what happened in this previous cycle. Price wound up coming just above the retracement fib. The massive support I have, structural support, is coming in right here at 50. I mean, this is, price would have to collapse 50% in a couple of weeks in order to reach that magnitude. That's an upward sloping line. If you look to the end of the year and you come into December of this year, that's at 65,000. That's going to be an important little marker for us to continue. But I do believe that is probably has a very high probability of holding. I don't think that we break this line. If we break this line, and you can see over here into the global lockdown, spike down over here, that comes in. Let's see where that comes in. Right now, below the retracement fib, 44,000. When we get to the month of October, that spike line over here, that safety line, will be the same as the 0.786 retracement fib. So when we get through October, if that price still holds, I'm going to say there's a significant probability that floor is going to continue to hold, and many people are going to understand 55,000 Bitcoin is cheap. We always said in relation to the next cycle, you will understand that. A lot of people here at Bitcoin trading at 102,000 recognize that. But when we say cheap, we want that to mean that the chances of that price ever trading below that are so slight. So anything's possible. It's the markets, but the probability suggests that it's not going to happen. We could look at it from this way. I drew this line over here, right? I'm going to go ahead and just erase it for 1 second. I don't want to erase the chart. I wanted to erase the green line. The green line is what I'm going to see. I'm trying to erase the green line. I can't erase the green line because the chart is now above it. So I guess I could do this. There we go. It's erased, Jordan. I'm just trying to give another perspective. This is simply taking past cycles and overlaying them. And you can see that right where we are right now is actually at the 4-year cycle mean. And Bitcoin, once again, is right on time. If we get into the end of the year, you could see past cycles have peaked around this level, but not all cycles, just past cycles. And you know that last cycle, it was there was obviously no blow off top, and price was obviously suppressed with people like FTX selling naked Bitcoin they didn't have, paper Bitcoin, and a whole host of other reasons. The most important being when the Fed announced they were going to taper their QE purchases on October 16th, 2021. And I said, get ready for a rate shock. Looking at the macro, Bitcoin is not immune. Very few people thought that we were going to see a rate shock, and a rate shock we did see. We did see that Bitcoin was not immune, and we did see that it is actually Fed policy that was the most crucial factor for Bitcoin and its bull market. A lot of people in 2020 that were not able to even begin to reason that that could be it. Is Tether the greatest risk? Anyway, so on and so forth. A lot of people, I believe, if we get to this fall, this winter, into November, possibly even December, and Bitcoin is at an elevated price. An elevated price, I'm going to say, is anything above 160,000, right? Right around that area of 160,000. By the way, there's no way anyone could predict time and or price. We're trying to give ourselves the greatest awareness to help make the smartest decisions. That's all we're doing. Power band floor. Thank you. Let me go ahead and take a look at that. But first, I wanted to give these expectations, and then you all know. Or for those that are new and don't know, I just want to be very clear. A lot of people thought Bitcoin had peaked already, and maybe it has. Right? We have yet to take out the all-time high on Bitcoin. Obviously, I don't think that is. And obviously, when I look at this loveliness, what is loveliness? Look at the previous cycle when Bitcoin took out the 0.786 and went straight up. That happened in this cycle as well. When Bitcoin took out the 0.776 and went straight up. In this cycle, though, when it took it out, you see that consolidation that lasted a long time. And this set off into a nice, beautiful, long, sustainable bull market. Look at this time over here. This consolidation has lasted even longer, much longer in time of duration. And my hope and my expectations is that what set off is a longer lasting, more sustainable bull market. We have not even come to the point of this bull market where monetary policy aligns. It's still tight. QT is still running. Rates are still elevated. Could there be a very difficult time to navigate in between, such as a recession? Absolutely. Could there be a liquidity crisis, therefore a financial crisis? Absolutely. Are we going to see Bitcoin peak between whether it was here in January or between now and November, December? Don't forget, a lot of people, a lot of experts thought we already peaked. Here we are again, just kissing the sky over here. Maybe it's a double top. Maybe it's a triple top. Maybe triple tops are meant to be broken. If we are trading above new all-time highs anywhere into the fall and winter, a lot of people expect that will be the top. I do not expect that. I expect prior to the 2028 halving, regardless of wherever Bitcoin trades to, that we are trading higher. I just want to be very, very, very clear about that. Here's the lower floor highlighted of the power law. I don't even know why it's called the power law. It's just overlapping cycles, something that you saw we were doing here in 2021. We had the deviations of all cycles. But for whatever reason, they call it the power curve support. And you could see during these 85 and 84% bear markets, we took it out. I could say in the previous bear market, volatility to the downside has been reduced. There are some people who think that volatility, because of these new products, these new derivative products being launched by MicroStrategy or other previously known as MicroStrategy, now Strategy, might actually cause excessive volatility, and both to the upside and to the downside. I personally do not think that. Now, that could happen. You could see some type of unwind, and much like FTX, when it went under, you saw that we traded down another couple of $1,000, right? Let's call it from 18,000 down below 17,000. Something like that could happen if one of these products were to blow up. I maintain and believe that we're not going to see in the coming bear market, we're going to see further reduced downside volatility. I don't think we see a 76% drawdown. From the work we looked at over here, obviously, my expectations right now would be we wouldn't see anything from where price is today greater than a 53% drawdown. So reduced volatility to the downside. Nevertheless, let's take a look at some of those prices on the floor. So we said 49,000 is 90,000 as we get into late December. You can see over here, this is a much higher floor, except that never never have you come close to testing that green line. You have this line over here. So if we look at that line, you could say that's very close to the floor that we just looked at. This is a little lower. And I could say, well, ours is probably more accurate because there's a lot of space in that area that's never been touched in any cycle. Just pure speculation, but nevertheless, we're looking at what the power curve support is. Let's continue forward and look in 2027, January 2027. This suggests that we're in a mega bear market. Interesting, because if you look at what's taking place in the macro, the Fed obviously right now is on pause. They're currently running QT. When they begin cutting, and right now, expectations for cuts have been, let's say, once again, significantly adjusted after the last FOMC. But the tough part of the cycle is when the Fed begins cutting rapidly. We're looking at into next year, 2026. We got some, let's say, we got the commercial real estate market is really going to come into play. We have what could be either a slowing U.S. economy if the tariffs wind up having very negative consequences, or we could be in the midst of a boom if Trump and his administration are able to pull this off. We could be seeing a boom. Lots of unknowns. That's all I'll say. This is the previous bear market lows have been established. That puts us out somewhere around $83,000, right? Assuming greater than 76% drawdown. Where is our low for our bear market low? And just let me highlight that line for you really, really quick. And $2,027. Why wouldn't you let me go out there? Why wouldn't you let me go out there? Hold on 1 second. I've lost my way. Let's go to a higher time frame. Let's see what's going on out there into 2027. And just let me get an idea of where that line is. In January 2007, 103. Who's right? By the way, in a crisis, an absolute crisis, I don't think we trade below this structure over here. This is the global lockdown. That is coming in. We'll use that as the absolute low. Look at that. That's quite clever. It's really the same low as the power law curve, right? Coming in into December, a little bit higher, 86,000. I would say obviously ours is more accurate, but and then you can see over here, well, they have it where the green line is highlighted. Very, 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 very close. And the one thing I've said before is I believe that those who use the power law model, that the flaw is very accurate. And the reason I've said that is because it matches ours. I've also said that the power law ceiling is going to break. And I don't have whatever the ceiling is right now to pull up with you. But the ceiling for expectations and likely this cycle over here before the 2028 halving is going to break to the upside. And again, just like a lot of people might believe that you could see something like a blow off top coming to fruition right now. A lot of people looking at potentially we're about to move outside of this accumulation cylinder and lead to a blow off top. It would match a lot of cycles ending in December, November of this year. That's what a lot of people would look to exit. And I'm telling you, the cycle high is going to be a lot closer to 2028. Is this going to be the cycle where diminishing returns are disproved? By the way, if you follow the fractal of Amazon, And you can see that there's a lot of major differences and a lot of similarities between these two coming out of their hype phase. They're facing reality stage, and a lot more similarities than differences, I will point out. But this would suggest it's the next cycle. And you all know that in this cycle, you saw prior to the halving, price making a new all-time high. So that would happen over here as well. You would see price, if this lines up, this just guide. If price were making a new all-time high prior to the halving, then you could see that this is where, after the halving though, but in the first year or two after the halving, is where all power law models would be obviously disproven. But until then, it's just all the debate of what you think is right. But I think the floor is very, very, very correct, as it is close to matching hours, at least through 2027. In 2028, the floor is coming in at roughly into January 126,000. 126,000 into January of 2028. Ours is significantly higher. Significantly higher. Significantly higher. If you look back, or I want to look back with you, basically all as I can say is that ever since 2017, which is not a long time ago, it's only 8 years. And I could only say in the last 8 years that floor has not broken. I just gave the wrong floor, excuse me. 140,000. Compared to power laws, they did it again. It's very close. It's very, very, very close. So I run that back. The power law curve support, or the power curve support, it comes in roughly and close to 128,000. I know that the structure is, and you've seen all of it throughout, is more accurate, but they're so close, it's ridiculous. Very close. We'll find out in real time which floor is better. That's interesting. And then could you say that we prior to the last 8 years, the floor was all the way down over here? Is that the ultimate floor? 55,000 Bitcoin is cheap? I don't think so. I don't think that when you look at the nature of adoption, that's not what that suggests. We should be actually hitting the top trenches of the hype phase rather than the bottom trenches. So I don't think that's going to happen. And then, yeah, this is just a different way of viewing that same thing. Here's that bottom trench coming in March 2020. That's where we bottomed out in November 2022. So during a crisis, let me remove this for you. The crisis was FTX blowing up. And again, I don't think that we tested this low if they didn't blow up. I think that 18,000 would have held, right? 18,300. I think that would have held. They didn't. They blew up. And then you saw that we tested the bottom structural support that I'm highlighting right here from the global lockdowns during that particular moment. There's a really significant chance that that is the low and continues to hold. And more than that, there's a significant chance that what happens is that Bitcoin actually doesn't see diminishing volatility at this phase of its adoption cycle, as we're hitting early majority, as you're seeing now Bitcoin Treasury Company, after Bitcoin Treasury Company being launched, at first gradually, and then suddenly, and we're seeing a much more movement into then suddenly occur, and it's still like early innings, right? So that's why when I'm saying as we get towards 2027, 2028, this puppy is really going to be running. And that's likely when we're getting close to, and it could be 2000, right? The first year or two after the halving that, but we're going to be trading towards these top trenches over into this area, and people's expectations of where price should be are lower than what they should be. At least that's the way I see it. If anything changes, I'll be all over it with you, and we will adjust as best we can accordingly in real time. Our positioning should be looked at. So let's go ahead, and we mentioned that Bitcoin bull runs is currently in the market. So is the current IBIT trade. And we're seeing Bitcoin exited the market, taking a small piece off the table, small profit. You're seeing Ethereum still holding its long trade, and Solana currently in a long trade. Cardano is very close. So you could see from the eyes of buy side boost. Those are the trade buy side alone, looking to take advantage of their full capital. You could see that just now Bitcoin is on the sideline. Solana and Ethereum still in the market. All of our 8-hour templates are currently taking profit on the sidelines. Ethereum is not close to exiting this trade whatsoever. From a discretionary standpoint, Ethereum has broken through all trendline resistance and is on a mega move. Cardano is very close here to entering on the buy side. It had a pending buy about an hour and a half ago, and then on that wick came off. So did the pending buy, but that's very close to entering the market. On stocks, we saw another stop out from Tesla and a stop out this morning from NVIDIA. Both of those are now reversing and towards their highs of that session. Again, that major move on equities and the gap up, to see it maintaining without selling off is a strong sign. So this sets up a new entry now on TQQQ, which has been a long time since TQQQ has been in the market, all the way back to February. And then we're seeing also another re-entry on Tesla. Tesla's drawdown now at this point is max. Since 2020, it's taken out its steepest drawdown over here, now down to about 12%. Again, it's not the template that's broken. You just looked at Ethereum doing a similar thing, and then again, off to the races. And we've seen this many times before. Nevertheless, it is a time of tension. Also, NVIDIA is at a time of its strong. I blame Trump. I blame, what do they call it? Liberation Day. I was going to say Insurrection Day. And also NVIDIA here in a steep drawdown over here, just about 14%. We are seeing so far, not NVIDIA, but Tesla and TQQQ getting ready tomorrow to enter the market if confirmed, if equity markets are able to hold on these highs over here. That it's the close of today that confirms whether or not there are buys tomorrow morning on the open. We saw Bitcoin over here, and I was just looking at Ethereum's held that similar trendline break over here. Were we early on Friday of taking the profit discretionary? Should we have waited for this discretionary trendline breakdown? Probably and likely, but it wasn't there at the time. Like, this was only established over the weekend. Price is broken down over here. It's very short term. I'm not reading anything into it. We're going to lean into and follow our mechanicals. If anything develops on the discretionary end, we will take a look at that and see what happens next. Something else that I want to say, so allow me to say it, and then just give me 1 second here. There's something else that I want to say, so allow me to say it. There we go. And that is, we wanted to look at gold and take a look at what's going on. By the way, on the calendar today, we have tomorrow, we have CPI. Very, very, very important. We've seen over the last few months, CPI beginning to roll over. Oh, I wish I pulled it up. I don't have it. Do you remember 3 months ago when we said that it looks like we're going to begin to see the peak hottest readings for a while of CPI? Well, it looks like that's going to change the other way now. And it looks like whether or not it shows up in this data or next month, that likely we're going to be looking month over month, some slight upticks for a moment. And that's likely until, by the way, for the first time since on the unknown of what this tariff situation would look like, companies now over the next 3 months, they at least have real numbers to work with and plan around. That's pretty beneficial overall to markets. I wouldn't say that markets are overbought by any means at this point yet. I would say that the smart money, once again, was retail. We're looking at a lot of shorts that still need to cover. Whether or not they're going to be forced to do that higher or lower than prices right now, I don't know. I'm just trying to feel out the picture over here. Again, Fed is still above their 2% year over year inflation target. Then we're looking out to PPI on Thursday. So a big inflation data dump this week. And then you notice I'm highlighting retail sales. It's very important to know whether or not the current state of affairs are hurting the US consumer or whether they remain resilient. So we're going to be watching retail sales now a lot closer than we have in the past. Any surprise on unemployment claims will move the markets. Thursday, we have Powell speaking, and then we also have inflation expectations to watch out for on Friday. We've taken out, we haven't closed above it, but we've taken out the deep seek low. That's the second repair in the markets. The first repair was outside of this wedge. That's coming off of a liquidity grab, breaking down the second time of the wedge support. And then when we broke out, that was our first repair. This is our second major repair. It probably should have been. This is our second major repair. Closing above this will be significant and likely opens up the door for a test into the overhead resistance. This now nullifies this potential Wyckoff distribution. We've put in a higher high instead of a lower high out over here into the breakdown. So that's a positive development. What else could I say about this? I wanted to show you when we were looking at the DeepSeek low. And then on Bitcoin, we were saying, well, we broke above that resistance. And then I showed you, well, the resistance that was above it. And you could see right where we peaked out till today, above the DeepSeek low, that's the next area of resistance. So it's a very similar situation occurring on the Bitcoin and on the Nasdaq over here, both taking out the overhead resistance, but still into an area of resistance above. Nevertheless, DeepSeek low is the point of reference that I'm watching. And right now it looks like that we're going to close above it. That is significant. This is the breakdown line on the Nasdaq. This was the breakout, much like the wedge breakout that we were just looking at. This is at any point in time, we close below it. That would be the technical breakout down we're looking to watch from this current move up. We looked at earlier the dollar. Beautiful entry. We did this Thursday together, set up Wednesday for Thursday. We're now coming into an area of resistance, breaking out above. Yeah, I could see why Bitcoin potentially is under a little bit of pressure right now. I don't read too much into it. It all makes sense. And you could see also that area that we're just looking at, that resistance on the dollar like that. But you also got some horizontal break above this. This is the next zone that we're targeting. This trend line over here, 103 and change. This is our last, from this view, trend line resistance up until we get to this business. So let me just do this. So you see that resistance, then support. That area is coming in at 103.82. So that's a confluence that we have to watch out for if we're able to rise into that area. 10-year likely peak today, and we'll continue consolidating in this area. Anytime we break down below here, that's when I'm going to say it's time for us to be bid on bonds. Until then, we're just watching and observing from the sidelines. A lot of people are very bearish right now on U.S. Treasuries. I think that they're gonna win when it comes to. They got a lot of debt they need to refinance. As Luke would say, they need to get rates low. They're gonna get rates lower. They have a lot of tools at their disposal at the right time. They are going to be used. My expectations are, and right now we're looking. If you don't know what those tools are, right, you could look at U.S. banks and you could look at, they could very easily loosen the requirements of the amount of treasuries they're able to hold. It's just basically the flick of a switch of a pen. The Treasury will do that. The U.S. Treasury will do that. You will see the 10-year come down. It's going to open up a bucket full, a water full of refinancing in the U.S. It's going to be very accommodative. And then eventually, as our expectations are, the inflation wave and the first wave peaking at 9.1, coming back down. When the Fed finally needs to go ahead and reinflate the system, whenever that is, and their whole job is to try to push that off as long as possible, the next wave of inflation is going to be even greater. At this point, I have no idea how far down they'll get yields, but at that point, when they do, that is the time to go short treasuries, and that's going to be long lasting. Right now, betting, well, there's not going to end well for people betting against it. We'll figure that out. We'll find that out. This is the first moment we've seen over here. If you just look right now, so far, the Fed's balance sheet is kind of going sideways. It's a big month to see whether or not do we run off, do we flatten out, or do we start seeing it rising? May is an enormous month to be focused out on the balance sheet. US dollar, Japanese yen, major breakout here as you're looking at historic longs on the yen. Wrong side of the trade, much like you will find out, is the same thing that's going to happen with the US Treasury market and yields. But again, we'll take some time to prove that out. But here, major trend shift on US dollar, Japanese yen, and some shorts look like they're going to get squeezed. How this relates to gold, I'm going to jump down to a smaller time frame, right? Tomorrow we'll probably do a gold-centric episode, which hasn't been done since coming back to March of 2023 when we were talking about the gold was set to explode into a super cycle. We said it's not going to stop at 2,500, and I will see you at 5,000. We'll reevaluate as we get closer. Gold right now, responding to the tariffs, and you could see currently under pressure over here, off 3%. Much like Bitcoin is off a little bit today. Is that a sign of the rising dollar, or is that a sign that people believe that the US dollar are going to come to terms? All of that basically happened right now is, as Trump set out last week, and he's like, I think they should do 80% tariffs. Our expectations of the market likely was going to look something more like 50%, which we said could get absorbed between the retailer, between the US consumer, and between the manufacturer. Now we're and currency moves. Now we're looking at potential 30% as the number, at least for the next 90 days. And that's even lower. And that's going to get absorbed relatively with little friction and no problem. Whether the final number is 30% higher or lower, we don't know. In the next 3 months, likely it seems that they're going to come to some type of agreement. Right now it stands, the US has tariffs of 30% on China and China 10% on the US. If it were to ultimately end up like that, it looks like the market is pretty okay with that. Does that put the end to gold's bull market run? No, it does not. And it had nothing to do with the tariffs in the beginning. This had everything to do with the Fed began tightening, sending off the macro to look for the favorable time for gold to be running. And then the technicals were the final blow up off of the mega cup and handle. And that was the technicals, macro and technicals align, set off the run. This is so right now overbought, and likely until we've looked at when it's been overbought in the past, when price finally breaks above the high of the RSI being overbought, that's when you get to see price continue the next legs up. So that's all the way up here, 33,000 on a closing basis, on a closing monthly basis. And yeah, probably and likely at this point in time, it would be very healthy to see a consolidation on gold. Whether or not we get to the area I'm hoping for and looking for, back towards the whole number 3,000, back towards this area of supply? I don't know, right? What's kind of neat about this, if I take this little, this is a one touch trend line. If this breaks at any point in time, then the resumption is likely continuing before the high is broken out of the RSI as I showed you. But check this out, even down here, I just move it to these two lines, and you can see it's not only these two lines, this is the structure that gold is currently in, right? So is it feasible to say we could get a retest of this line of support again? Yeah, and that would be closer to where I want to get it. And if that does happen, many times we see these type of channels break down, and that's where the move ends. So that would be the ultimate opportunity, I think, to re-engage if you're looking to dollar cost average into gold, would just to be very patient and wait to see if at any point in time we got a breakdown of this channel. And then you're wrong if you get a breakout to the upside. I don't think the bull market in gold is anywhere close to being over. I don't think it's close to being over until we begin to see shortly after the Fed comes back into the market. I think that's going to be a long time. I think we're going to ultimately see gold much higher. Boom. Which one, Luke, are you talking it's somewhere over here at the 200-day moving average? Is it close to this trend line, or is it close to where price is right now? That's awesome, Jared. I'm going to go ahead and review Friday's session myself. 2008. I'm going to go ahead and 2008. Oh, okay. 2,700. So in that area of supply, and the 200 days a little bit lower, that's going to be sloping up. So by the time we got to it, if assuming this channel holds in the meantime, if that's all the way into or out to past the summer, right? Yeah. Interesting. I'd be hungry if we get just a breakdown. That's when I'm going to be looking for the opportunity. Probably the best place to do that would be to engage with an underbelly. I don't know that this is just the support that's been tested. You could see that this will continue. And you could actually see it's the same angle right off that little thing over there. I wonder. Well, we'll navigate it together. I'm bullish. We're in the midst of that bull market that's not ending anytime soon for gold, but we are entering to a period where it's time to, I think, to consolidate, to cool off. I'm trying to find, and I can't find the RSI, and we haven't even begun cooling off yet. The beginning would be if the RSI trades under 70, right? We're still very, very, very elevated. All right, y'all. Tomorrow, we're back at it to get it. So keep our heads down, to grind, put the work in, and make sure we stay on the right side. Everyone, thanks for being here. Have a beautiful day, everyone. God bless you. I'll see you all tomorrow.